You may have heard in the news that Reddit has filed to go public. Just a couple days ago, Reddit filed technically to go public. But what does that mean exactly? So essentially, usually what they're referring to when the news says someone filed to go public is that they have filed something with the Securities and Exchange Commission to list their stock. And normally that's an S-1. That's the form that's filed with the SEC for most companies when it's their initial public offering. So that's what this is. So it's a chance to list their stock on a stock exchange to be freely traded. And in connection with that, a lot of times people raise capital as well. So then they try to buy in and get some of the stock, and hopefully the price goes up and they make some money. So there's a whole process that gets involved in that with underwriting. They go to underwriters and lawyers and accountants to prepare everything, all the documentation, to start pre-selling potentially blocks of stock to institutional investors, trying to come up with a price target. And this whole process is probably going on for 6 months, even several years in the past, leading up to this to prepare for this. They have to have all of their audited financials current. They have to have the underwriter out potentially trying to sell blocks of shares and come up with a market value and going through the whole process of getting this all ready. So what I'm going to do is show you what the S-1 looks like and kind of go through it real quick. I haven't read through it in detail because it is very lengthy, but I'll just kind of hit on some major points in it so you see exactly what it is. Okay, Reddit went public or is going to go public. They filed. Here's exactly what they filed with the SEC. So let me share my screen and I will show you, and we can walk through what exactly some of the stuff is. All right. So here you have Form S-1 for Reddit Inc. So this is the cover page. This is a standard SEC filing. A lot of times there's blanks in here because this is their initial filing. So what happens is the SEC gets this and they're going to start reviewing it. They have a staff that's going to review this and say, I don't understand this. You need to clarify that. I don't think this should be in there. They're going to come back with a bunch of comments and questions to Reddit's lawyers. And so there's going to be a period of back and forth until the SEC is signed off on the S-1 saying, yep, we think it looks good. We think it complies with whatever disclosures we need to see. And then it's ready to actually formally go into place. Now, in the meantime, a lot of times I'll show you in here somewhere, there's some blanks, like the total number of shares. Here's the cover page. So Reddit is offering blank number of Class A common shares. That hasn't been filled in yet because they don't know until they finalize the price and how many shares they're going to do, how much money they're raising. All those amounts will be finalized in the next few months. And then they'll fill in the blank in terms of the price, how much capital they're raising, number of shares of stock being sold. And what they're doing with an S-1 is they're registering only Class A common stock. And that's going to be traded on the New York Stock Exchange under proposed symbol RDDT. And this is only for their Class A common stock. Now, when someone registers and goes public, they only register some of their stock. There could still be other stock. Like if you're an early employee or an investor, you may have Class B common stock and it's not getting registered, meaning you can't trade it. So it's still restricted stock that you're holding on to. So usually when you represent investors early on, you want to try to make sure that they get registration rights so that if a company does go public, then essentially they can say, hey, we're entitled for our stock to also be included in this filing. So yeah, like all the stuff about price per share, underwriting commissions, whatever they're paying for people to try to sell their stock, that has to be filled in. Here's some of the people that are involved. And then this is kind of a prospectus. It's basically like a business plan talking about the company and who Reddit is, what they do. And in here, there's going to be details about the company, what they do, certain disclosures the SEC says that they have to include. Here they have a letter from their co-founder talking about kind of the history of the company, Steve Huffman. All right, so it has their mission, kind of an overview, like a business plan of what they're doing. Let's just skim through this real quick. I haven't gone through it in detail. their strategy for the future of the business. And you can look this up. If you go to sec.gov, in the top right, there's a search feature, and you can click on company filings. And then when you go to the company filings, you just type in Reddit and do a search, and it'll show you Reddit Inc. And you can click on S-1, and you actually can go to and view this. It's publicly available. So let's talk about the market opportunity. A lot of the sections in a normal business plan, like, who's our competition? What are the risks associated with the business? What are our plans? Okay, and then we'll probably start getting into, okay, here's the terms of the offering. The shares of stock they're offering has not been filled in yet. So it's Class A common stock. Don't know the price, don't know the number of shares, don't know how much money they're raising. So that'll all be filled in later. And then it goes into the details about the capital structure of the company. So the Class A common shares are the ones that they're going to basically list on the New York Stock Exchange for people to buy. And they're entitled to 1 vote per share. There's Class B and Class C common stock. One has 10 votes per share. The other has no votes per share. So this could be, I don't know if, but Class C might be just like for employees who don't have a vote, or Class B could be for founders who get 10 votes to 1. All right, risk factors. Proposed ticker symbol RDDT on the New York Stock Exchange. And here it talks about what are the other shares of stock that they have. So they have Class B common stock. They have Class A restricted stock units. I'm not going to get into all the details because they have all complex structure. They have performance-based restricted stock units. These are like employee incentives. Looks like they have some options to purchase stock and some other stock that's reserved. Okay, so they've got sort of okay, and they're assuming conversion of preferred stock into Class A. So this was probably some of their investors were of Series F preferred stock, which is being converted into the Class A common stock, most likely as a result of registration rights that they were granted. There's a number of other things. Part of an S-1 also includes all of their financial information. So there's going to be snippets in the main S-1, and then attached to it are exhibits, what's going to have all their financial statements, balance sheet, income statement, cash flow statement, and footnotes. So you can actually gather a lot of information from financial statement footnotes, which are usually after the financial statements. And these are things that auditors ask you or require you to put in to tell more about the numbers and what happened. And you can usually get a lot of information about the history of the company and its performance, not just from financial statements, but from the footnotes and the attachments. So this is just a quick summary of profit and loss for the company, which through 2023, year ended 104 million. So it's in thousands. So add 3 zeros, 804 million in terms of total revenue. Okay, so a lot of this stuff is just financial information, disclosures, risk factors. This is a major area of an S-1, just like any other private placement memorandum, prospectus. When you're selling to investors, the SEC wants to make sure that you've covered all kinds of different potential risk factors. So to make sure that they're warned, hey, you could lose your money and here's why. So risks related to our business, there's going to be a million of these. It's probably going to be 20 pages worth. Changes in internet search algorithms could impact our website. History of net losses. We may not be able to be profitable. They're still in early stages of monetizing their business. If something happens to advertisers. So you can see there's just a whole line of disclosures about how we could potentially fail and you could lose your money. And that's normal. That's pretty standard that are put in these. They're actually required generally by the SEC. They want you to disclose as many risks as possible. So let's scroll through some of these, see what else we got here. Risks related to human capital and culture. Yeah, we're already 15 pages in, so.
Yeah.
Risks related to government, regulation. Yeah, I'm gonna guess probably half of this S1 is risk factors. Okay. Still in risk factors. Okay, forward-looking statements. Usually this is a standardized disclosure. So they're going to be talking after this about projections, outcome, how we've operated so far. And if they talk about future estimates or plans, that there's no guarantee of future performance. So here's where they got the industry data from. Use of proceeds. So this is common in when people are raising money. You want to disclose, what am I telling the investors, what are you using my money for? So here they talk about, and it's all blank until they fill it in. It'll be filled in right before they actually formalize and make the S1 effective. The SEC does. So some of it's talking about underwriting costs for the IPO, because there's a lot of costs involved, commissions to people selling those blocks of shares, satisfy tax withholding obligations, basically working capital. Okay, so some tax withholding obligations on different employee incentive plans. Okay, dividend policy, never declared or paid a cash dividend. And they're going to continue to retain funds to deploy into the company. So looks like they don't have a plan to pay out dividends anytime soon. Capitalization, this tells you about the capital structure or ownership structure of the company. So they've got Class A common stock, Class B common stock, and Class C common stock. For now, this is what they show as being out 6,000. Class B, they don't have the Class C amount listed. Yeah, so some of this will be filled in before they make it effective. Talking about how many shares of options are out there that could potentially dilute the common stock. Looks like their founder or CEO has some type of incentive plan. It's talking about that. Okay, here's it talks about the dilution. So based on potential exercise of options and some of these employee incentives, restricted stock units could result in dilution of your ownership interest. And again, they haven't filled any of this in yet. Selected information from their financials. So these are little tidbits of summaries of how they've done so far. Cash and cash equivalents. Let's see, got to use my math here. 1.2 billion in cash and cash equivalents. Convertible preferred stock. Total assets 1.6 billion. 155 million in liabilities. Doesn't look like they have a ton of debt. And they already have a fair amount of working capital too. All right. Some reconciliation. Okay, management discussion and analysis. Here's where top levels of management talk about, hey, who are we? What have we done so far? And how do we think we're doing right now? What's our plan for the future? Here's trends they talk about in user data matrix. Daily active unique users. So quarterly average daily active unique users in the millions. So showing the trend going up. Quarterly averages. dollar volume from those. So they're talking about how to monetize, selling advertisements in 2006. Allowing data licensing. Okay. So you can like, I haven't read this whole thing in detail, but you can find sometimes some interesting stuff in here. So just as we're looking at this, we're in the early stages of monetizing our emerging opportunity in data licensing by allowing third parties to access, search, and analyze data on our platform. So you may hear people talk about data privacy policies. What they're saying is, we've collected all your data at Reddit over the last, decade or whatever, 2 decades that they've been around. And we're looking at licensing out to third parties all of your data to make money off of you because of all the data that they have. So let's say, so they think that it's worth $203 million for some of the contracts they're working on, and another 66 million in 2024 from data licensing, basically selling your data. Okay, so that's interesting, but not surprising that they would want to do that to earn revenue. Okay, so this is getting into some kind of nitty gritty about financials and financial statements. So let's get to farther on past the management's discussion. Okay, some other market risks, discussion of the business, a little bit more business plan type of discussion about the platform, its users, and future plans. Licensing, advertising. This, they're just talking about their business, explaining their business to you, how it works, how Reddit works, if you've never used it. Okay, we're going to get through this in a minute here. Talking about competition that they face, what regulation they might face, legal proceedings that could impact the business. And here's list of management. So this also lists who's in charge of the company, who are the directors of the corporation, who are the officers. So here we have that list. They also have to talk about their compensation. So here's about a biography of each person in management, their history. Should be getting to ownership that they have. Okay, where's the ownership? Different committees they might serve on. Okay, director compensation. So here we have a table that lists out all of their executive officers and directors. This one's just their compensation, but it also talks about ownership that they might have in stock in the company. So here's their current salaries. Looks like their CEO is taking a little less than some of their other officers, but a lot in stock awards, 98 million, and options. So total compensation is a lot more, $193 million. Salaries, equity that they have, what they've had in the past, and when they've been granted equity. So you're going to see the whole history of the company in this. That's why it's so long. What compensation agreements do they have? Employee incentives. This explains those restricted stock units that they give out. And those will also usually, I'll show you that they're attached as exhibits typically, the actual plans. Related party transactions. This is a major area that the SEC wants to see, talking about not just who's controlling this company, who owns it before you go public. So who are the major shareholders, and are there certain relationships between some of these people that could have an impact on the business? Like, is the CEO also owns a consulting company that has a contract with Reddit where he gets money, even though it's not in his name, he owns this other business. So that business is making money off of Reddit. So we have to disclose that at the end of the day, the beneficial owner is the CEO. And so we need to disclose what that is and how much he might make off of it. So here we talk about some other preferred stock financing in the past that could involve existing officers. Governance agreements. Principal and selling stockholders. So they're registering stock to be able to be sold in the Class A common stock. Now, in here, usually what you'll do is you say, okay, who are the ones selling? Are these all brand new shares of stock that are being listed and sold to new people? Or is somebody basically reselling some of the insiders who've been around? Are they reselling some of their stock? So this talks about who are the selling stockholders. So what they beneficially own and who the selling stockholders are. These footnotes are obviously very detailed. I'm not going to go through all of those. Description of their capital stock. This tells you more about the rights of ownership behind each of the types of shares of common stock, voting rights. This would be like in their bylaws or shareholders agreements. Is there a right to convert from one to the other? Preemptive rights. So stock units, voting agreements, registration rights. So they have some anti-takeover provisions. Talks about their bylaws, indemnification under Delaware law because they're a Delaware corporation, how they can indemnify some of their officers and directors. Okay, transfer agent, that's the person, the company, Computershare, that's one of the main big ones, Computershare Trust Company, that basically holds on to their stock, if you will, and just holds an inventory of the stock, usually in electronic form, not physical certificates, but Computershare will have an electronic registry of who the shareholders are and how many shares they have. And then that transfer agent is in charge of, transferring shares of stock between new buyers and sellers so that the company doesn't have to do that. Shares eligible for future sale. Let's try to get through a little bit more of this. Material federal income tax consequences to non-US holders. So there can be withholdings and other things for foreign owners. This just tells you a little bit more about that. Underwriters, these are the people trying to sell their stock for them. Here's what the price is going to be. And this will be filled in right before it's declared effective. They'll know these numbers to fill it in. And they'll get final pricing. On here. Talking about different foreign ownership. Okay, legal matters. Latham and Watkins and Davis and Polk have acted as counsel. Okay. And they probably offered an opinion letter where you can get additional information. Okay, the consolidated financial statements. These are attached. And can we get to them here? Yeah, okay. So public accounting firm, KPMG, prepared the financial statements and all the notes, the footnote disclosures. So here you've got, again, like I was showing you before, all the financial statements, cash flow, profit and loss. Now here's the notes to consolidated financial statements. These are things that under GAAP or auditor requirements, listing exchange requirements have to be disclosed. So a lot of times you'll see stuff in here that might be kind of interesting about things that they've done in the past. Some of these are just general accounting policies they have to follow. Cryptocurrency. let's try to get past some of this here. Revenue broken down, because before it was just showing you a general summary. Now you might get a little bit more detail. Okay, how much is it advertising revenue versus other revenue? And what is that type of revenue? How do they recognize revenue? Is it future revenue that they booked? Is it when they get the cash? Okay. Net income per share. So when they come, basically when they say, hey, we've got a certain amount of cash, how much of that is actual cash or cash equivalents? Money market, commercial paper, how much is in treasuries, bonds, corporate bonds. This has that more detailed breakdown. Balance sheet comparisons, operating losses, intangible assets. I'm just trying to see if there's anything that I want to call out here. They have a line of credit, so they're talking about what debt they have, what the terms are. So you can see all the details about the inside of their business. Convertible preferred. A lot of the stuff we've already seen. Stock-based compensation, how they account for it. Related party transactions. Okay, advance. I didn't see where advance was defined. That's probably owned by one of the existing officers or directors. Holds all of the Series A preferred stock. And they sublease their office space in New York and Chicago from a company called Advance, which also owns 34% of outstanding voting rights. Data licensing agreement they just entered into. All right, so that's pretty much it for the S-1. And then part 2, information not required, meaning obviously just like what it says, it doesn't have to be in the S-1, but we still are going to disclose it anyways. So they're paying $55,000 approximately just in filing fees alone for this public offering. The fee to the SEC, depending on the number of shares of stock and the class. FINRA, they have a filing fee. And then also to be listed on New York Stock Exchange, you have to pay a listing fee and also have to go through a process of working with the New York Stock Exchange to prove that you've complied with their listing requirements. So they have certain things that they have to see to be compliant, to be able to be traded on the New York Stock Exchange, which are usually a higher level of disclosures and other information, like in this S-1, than might not necessarily be required. But the New York Stock Exchange says they have to do this. So here's some other expenses that are going to be filled in because they don't know yet. Legal fees, accounting, blue sky fees, transfer agent fees. And here they're talking about recent sales of securities. And here's all the exhibits. So if you want to see what a sample of some of these agreements look like, this is a hyperlink. There's certificate of incorporation, there's current bylaws, the investors' rights agreement. A lot of the stuff that's referenced in the S-1 is going to be in here. The legal opinion of Latham and Watkins. This is a legal offering. Investors' rights agreement, office lease, their debt agreement, stock option plan, their exercise notice in connection with stock options, employee stock purchase plan, indemnification agreement with the executive officers. Not all of these are in here. Usually there's going to be a hyperlink to most of them. List of subsidiaries, the accountants and auditors signing off, and then the signatories, certain officers and directors have to sign, certifying that everything's correct, basically. And so these are the different officers that sign, and that's it. So that is the S-1. That's what they look like for when somebody technically goes public, does an IPO, whatever you want to call it. You can look these up on sec.gov under the company name. And so hopefully that gives you a little bit more information and explains what it means when someone says they filed to go public, meaning basically they probably filed the S-1 with the SEC.